Well, no, because this means I'm going to have to pay it for years and years and years. Despite me paying quite a lot each month, the balance isn't going down. How is this okay? I just don't understand why we're not in an uproar. It is never too early to start planning for your retirement, and that's where our sponsor, Pension Bee, comes in. Pension Bee is on a mission to build pension confidence and create a world where everyone can enjoy a pension. So whether you've moved around jobs a lot and are looking to consolidate your pensions, one thing I've really come to appreciate is how important retirement planning actually is. My parents are now at pension age, and watching them navigate the complex world of pensions, retirement plans has really been eye-opening for me. It's been a real reminder that this stuff doesn't magically arrange itself when it's time to retire. It's never too early to start thinking about your future, so that's where our sponsor, Pension Bee, comes in. Pension Bee is on a mission to build pension confidence and create a world where everybody can enjoy a happy retirement. So whether you've moved jobs a few times and are looking to consolidate your pension because your pensions are scattered around all over the place, or you're self-employed and need a flexible pension that lets you contribute more when things are going well and less when things aren't, Pension Bee really makes it simple. You can bring your pensions together into one easy to manage plan so you can see everything clearly in one place and feel more in control of your future. Don't worry, signing up is really easy. We've put a link in the show notes. It's quick and it's straightforward. So if retirement feels far away for you, trust me, it comes around so much quicker than we think. So take control of your retirement with Pension Bee. And just a little reminder, when investing, your capital is at risk. Recently, Rachael Reeves said that student loans are actually fair. What do you mean fair? Because how much you pay back depends on when you were born, when you went to university, therefore which plan type you were on, and how much interest you're being charged. How is that fair? Please explain to me how that's fair, because you could have studied the exact same degree as someone else, but you're paying way more and for longer for that same education. So please explain to me how it's fair. With that said, welcome back to From Roots to Fruits. It is the first episode that I'm recording in 2026. I'm so excited for this year. We're not holding back. We're discussing everything and we're going through the detail. Here's truly the year to finally understand your finances and to gain back control and power, because a lot of people are working very hard to keep money in their pockets. So without further ado, let's get into it. If you're new here, my name is Arlyne, founder of Roots to Fruits and the host of this podcast, From Roots to Fruits. This is our second year of hosting this podcast. Some are solo with just myself ranting and talking about the research that I've done. Some are interviews with amazing guests that we host, and please check them out. We've got loads of episodes recorded so far, so you have loads to catch up on. And this podcast exists because there's so many financial systems that exist, and we're not really fully told exactly what the implications are, and we're left feeling like, oh, is it me that just doesn't understand finances? But no, it's actually because we're not taught these things. So let's discuss them. Let's empower each other. Today's episode is not about blaming graduates or making them feel bad for actually taking out a loan. It's not about regret, and it's definitely not about shaming people for going to university. It's about the bigger question and the evolving climate of student finance and just how things work in the UK economy. So let me ask you this before we get into any detail. Do you feel like the UK student loan finance system is fair? Or the rules that keep changing and the interest rates that just keep going up, is that a little bit ambiguous? I remember when I was an 18-year-old and choosing the subject that I was going to go and study at university, which ended up being business and finance. Originally, it was international finance and business studies. But at that time, I was so young. I did not understand these finance systems, and they were sold to me. I remember talking to my parents as this is just something that will just run in the background. You're going to be barely charged any interest, so you might as well take out the loan and take out as much as you can in the maintenance loan as well. That's what I understood. Maybe if my memory is a little bit wrong, I don't know. But that just shows that this is being marketed to really young people that are barely even understand how the finance system works, yet they are signing up to a loan, a tax, a finance product that is going to last for the majority of their adult life. And when these 18-year-olds are signing up to it, they are assuming that it's going to be a fair system. It's going to be a product that is clear when they sign up and it's not going to change throughout their life. And I'm not convinced that this is what has been happening here. So let's rewind for a second. How did we get here? For much of the 20th century, university in the UK was free, but it wasn't accessible. Only a small, wealthy group of people actually went to uni. So while education was free, opportunity wasn't. In the late 80s and 90s, the government wanted to expand access, which is a good thing. More people were encouraged to go to universities. Bursaries existed, maintenance grants existed. The state still carried most of the cost. Then, in 1998, tuition fees were introduced. £1,000 a year. Still reasonable, not much. The rest was subsidized by the government. So therefore, it was paid by the taxpayer. Fast forward, in 2006, fees rose to £3,000. Now, that's the one that I paid because I went to university in 2008. It was still manageable, still subsidized. But then in 2012, everything changed. Let's introduce Plan 2. This is when tuition went up to £9,000. Under the Conservative Liberal Democrat coalition government, this is what happened. And students were told you will only repay if you earn above a certain threshold. Repayments rise with earnings. Think of it like a graduate tax. And don't worry, you'll probably never pay all back anyway. It will be written off at some stage. And at that time, two key promises were made. The first one is most courses will only cost about £6,000, so double the initial £3,000. However, the £9,000 will only apply to exceptional cases. But I guess they didn't actually define what exceptional cases are. And the second, the repayment threshold will rise each year in line with earnings. Now, neither of those things happened. Almost every university charges the maximum because we never really defined exceptional cases. And that threshold that they mentioned, frozen. Now, this is where the unfairness starts to unravel. So now let's fast forward to today. They repay 9% of income above $29,385. And this comes out automatically throughout their payslip, the PAYE, with interest rates ranging between 3.2% and up to 6.2%. This really went up a couple of years ago. Now, this depends on your income. Now, here's what's really annoying a lot of people. Even if your repayments don't cover the interest, well, interest still accrues. Meaning, even if you're repaying every month, your interest still goes up and your balance still goes up. Now, in the autumn budget of 2025, the government confirmed that from April 2027, so in a year, to at least April 2023, the repayment threshold will be frozen, meaning the more people earn, right, you will get maybe a 2% pay rise, then you're falling into the threshold where you start repaying student finance, meaning that more people start to repay and they repay more of their income. And over a lifetime, many will pay more than they actually borrowed in the first place. And when I found out how much they're going to be earning every year, I was like, of course they're going to keep it this way. Of course they're going to say that is fair, because they're getting 400 million every year from these students that are paying back their student finance. And it's not just the cost of the tuition, it's all that interest that is racking up that you just keep on repaying over the majority of your adult life. This isn't just about numbers, it's about the risk. 18-year-olds signed up to variable interest, unknown repayment timelines, and a system where the government can change the rules. Show me what other industry can do this. Regulated lenders, not this way. So why should student finance? If a bank was to change the terms of the loan or the credit card that you'd have taken out halfway through, then a lot of people will be in an uproar and the FCA will have to investigate it and they'll have something to say. Well, why is it allowed then for students? It's because the lender is the rule maker. Someone had to say it. So let's talk about who gets hit the hardest. Unfortunately, women are most likely to take the hardest hit. Yet again, we are always at the firing line with all these policies. Now, this is the reason. It's because women are most likely going to take a career break to maybe create a family and grow a family or take breaks here and there. So that means that you're not actually repaying your student finance. And we all know about the gender pay gap. So we are actually going to earn less over a lifetime, meaning that we're less likely going to pay off that entire student finance. Some women end up working part-time as well, meaning they're not earning enough to actually repay the full loan. And what's the consequence for this? The interest starts to accrue, the debt starts to get bigger and bigger, making it impossible to pay. And don't get me started on the ethnicity pay gap as well. One subject at a time. I say we, but I was really lucky because I was on plan 1, meaning that I paid less for my degree and I completely acknowledge the privilege that I have here. And my career has gone really well. I managed to earn quite a lot in my 20s and I did prioritize paying off the student finance in my 20s. In August 2024, I actually shared my story with the Times. I talked about my strategy for overpaying because I could see where things were going and where it was headed to. And frankly, I was frustrated by seeing my student debt constantly on my payslip. And I just thought, this is money that could be coming to me. This is money that I could be investing in something or saving to buy my property. So that was my plan. I purposely paid off my student debt. And it wasn't loads. At first, it was like £50 a month or £100 a month when I could afford it. And of course, when you get a bonus as well, that means that you repay quite a lot into your student debt. So yeah, that was my strategy. And I shared that as well with the Sunday Times. And I was so fortunate to then speak to loads of people that then shared their experience. And a lot of people are really, really frustrated by balance at that stage where the interest rate was quite a lot in 2024, meaning that no matter what they were doing, they were paying off quite a lot, but then it was still going up because the amount that they were paying wasn't offsetting the interest that they were being charged. Therefore, the balance keeps going up. But if this is money that's not coming into your bank balance, then it's not something that you're like, oh yeah, it's just a tax. Well, no, because this means I'm going to have to pay it for years and years and years. Despite me paying quite a lot each month, the balance isn't going down. How is this okay? I just don't understand why we're not, in an uproar. 2025, I went back to the Times again and I spoke to Holly Mead on the podcast.
Hello and welcome to Feel Better About Money, the podcast from the Times and Sunday Times that helps you take control of your finances by talking about it openly, confidently, fearlessly. I'm Holly Mead and today we are tackling something that can feel confusing, overwhelming and gosh darn expensive. Student loans. We are a week from A-level results day and a new university term is just around the corner. But tuition fees in England are on the increase. They are rising for the first time in 8 years, going from around £9,250 a year to £9,535. That's a 3.1% increase. Get your calculators out. And while the average graduate now leaves university owing, whisper it, £53,000. That figure isn't quite what it seems, because here's the thing. In the UK, student loans do not work in the same way as other types of loans and debt. They are an anomaly and they are incredibly confusing. So to help us unpack how it all works and share her own experiences of paying off her own student loan, I'm joined by Arlyne Chinyanganya, an accountant and founder of Roots to Fruits. Hello.
Hello.
Thank you for joining us.
Thank you for having me. So you can check out the podcast. I'll put the link in the show notes. And we discussed this again, and we were just talking about, well, is it worth it for young people to go to university if they're going to be having to pay off this student debt for their whole lives? Should they just accept that they're going to get this tax? And I think it depends, to be honest with you. It depends on what you want to study, and the experience of going to university, honestly, is still fantastic. So you just have to weigh it up and see what works best for you. Or you could delay, make sure that you save up and maybe work for a period. There's loads of other schemes available now, apprenticeships as well, or you can get sponsored by a company to go to university. There's loads of things that you can try and do. But the conversation was, well, what do students do? And should they just kind of give up and that this is what it's going to cost for you to go to university? How can we go forward? And I love the campaign that's going on right now where we're discussing this in detail. We're being loud. And Rachael Reeves has heard about it. So they must be talking about it in Parliament. And I think we need to just keep on going. Let's not take this response as, oh, okay, that's what they've said. Well, no, actually, what can be done? We cannot accept this because as 18-year-olds, this isn't what we were packaged. This isn't what the marketing said. This isn't what we signed up to. So here's that question. Were students missold? They were told that fees weren't going to be 9K. That was going to be in an exceptional case. And thresholds will also rise each year. Neither happened. Now the burden sits with the borrower. I don't think policymakers intended harm. I completely appreciate that it's really hard to set these policies and to maintain them as well. And you've got different people in power every 2 minutes. But I do think that the system may be becoming too big to fix, and that's dangerous. And what you're finding is that trust is eroding. Young people just feel like they've been left behind, forgotten, and they're being charged all sorts in different arenas of their lives, and they just keep feeling like, who can we trust if we cannot trust the government to look after us, to have our best interests? Therefore, they're just going to disengage. So what do you think? Are student loans fair? Fair to who? Fairness isn't just about access. It's about transparency, stability, and informed consent. 18-year-olds deserves clarity, not shifting priorities. If you're affected by this, of which I know a lot of our audience will be, please leave a comment. Let me know what you think. Has this affected you? Yes or no? Positive or negative? Because it's actually interesting to hear if someone has been affected in a positive way by this. This conversation matters. It's been long overdue. I am here for it. And I want to hear from you. I am here for this campaign, rethinkrepayment.com. You can sign up where they are campaigning to reduce the interest rates for student finance. And I think it's such a great initiative. The more people that sign up, the more campaign is successful. So wishing them all the luck. That is all for us today, guys. Join us next week for some more seeds to sow. And please remember to support us by following and leave a rating on our show on whichever platform you're listening to us from. To those watching on YouTube, please leave a like and a subscribe to our channel. All of your support goes a long way. Thank you so much for joining us today. And remember, keep shining.